Welcome to your daily dive into the latest and greatest from the tech and finance worlds. Get ready to explore the stories shaping our future and the innovations driving change. The recent acquisitions of Versep by Anthropic and the strategic move by 24 to enhance its AI capabilities underscore the intensifying competition in the artificial intelligence landscape. These developments are significant as they not only advance the efficiency and functionality of telecommunications and software automation, but also reflect the ongoing talent wars in the tech sector, particularly following high-profile departures like the Meta poach. While Pilgrim's Europe diversifies into agriculture with Hermitage AI, the primary focus remains on optimizing supply chains rather than on cutting-edge AI technologies, highlighting the varied applications and strategic priorities within the broader AI ecosystem. The absence of closures in AI deals over the last 24 hours, combined with 25 pending transactions expected to finalize by H1 2026, indicates a cautious approach in the market. Investors may be weighing the implications of economic conditions, regulatory scrutiny, and technological advancements before committing to new deals. This trend underscores the evolving landscape of AI investment, where strategic timing and thorough due diligence are becoming increasingly vital. Google's $32 billion acquisition of Wiz marks a significant strategic move in the highly competitive AI landscape, positioning Google Cloud as a leader in AI security and multi-cloud setups. This deal not only represents Google's largest acquisition to date, but also underscores a growing trend among big tech firms to prioritize partnerships and acquisitions that enhance their AI capabilities amidst increasing regulatory scrutiny. With no comparable acquisitions from rivals like Microsoft or Apple, Google is setting a formidable benchmark, potentially reshaping the cloud security landscape. The competitive landscape in AI is intensifying as major players like Microsoft and Meta solidify their strategies, with Microsoft leveraging its exclusive partnership with OpenAI to enhance its cloud offerings, while Meta focuses on internal development to drive personalized content. Meanwhile, Apple's lack of significant AI acquisition plans could hinder its ability to compete effectively unless it makes a substantial investment in talent and technology. This divergence in approach not only highlights the varying strategies for AI advancement among these tech giants, but also underscores the critical role that talent acquisition and model development will play in shaping the future of the industry. The recent developments in major tech firms' government contracts underline the growing intertwining of AI capabilities with national defense and security. Microsoft's significant contracts, particularly in augmented reality and cloud services, position it as a key player in military innovation, while Amazon's focus on partnerships like the Nimbus project illustrates its strategic investment in AI applications for defense. As these companies enhance their military ties, the implications for AI governance and ethical considerations become increasingly urgent. The continued influx of capital into AI startups, evident from the 2025 funding rounds exceeding $20 million, underscores the sector's escalating importance within both tech and finance landscapes. Major investors are increasingly recognizing AI's potential to drive innovation and efficiency across various industries, suggesting a robust trajectory for market growth. This trend not only highlights investor confidence, but also indicates a competitive race among startups to secure resources for advancing their technologies. The recent funding rounds in AI, particularly the $900 million investment in Luma AI and substantial backing for platforms like Emergence Capital Partners, underscore a significant shift towards foundational AI infrastructure and models, primarily concentrated in the US West Coast. This trend indicates an escalating confidence in the scalability and impact of AI technologies, as investors increasingly prioritize robust platforms that can serve as the backbone for various applications. The growing number of startups achieving valuations above $100 million further emphasizes the burgeoning landscape of AI innovation. The recent surge in AI funding, highlighted by Anthropic's staggering $13 billion Series F round at a $183 billion valuation, underscores the increasing investor confidence in the sector's potential. As companies continue to attract mega rounds of capital, this trend not only reflects the robust demand for AI technology, but also raises questions about market sustainability and competition. The substantial investments signal a race among innovators to capture a rapidly evolving landscape, making it a critical space for stakeholders to monitor. The recent funding rounds for AI companies reflect a robust appetite for investment in the sector, particularly in foundational technologies like generative AI and neuromorphic computing. OpenAI's extraordinary valuation of $300 billion underscores its dominance and the potential it represents in not just artificial intelligence, but the wider tech landscape. This influx of capital indicates a belief among investors that advancements in AI will be pivotal in shaping the future of various industries, from defense to infrastructure. The release of advanced AI models by leading companies like OpenAI, Anthropic, and Mistral signifies a pivotal shift in the landscape of artificial intelligence, where multimodal capabilities and extensive context processing redefine the limits of computational tasks. With Mistral's emphasis on low-cost efficiency and open-weight models, the barriers for enterprises to adopt AI solutions are lowering, potentially disrupting the dominance of proprietary systems. This evolution not only enhances productivity across sectors, but also raises critical questions about the future of data privacy and model accessibility in an increasingly competitive market. The enforcement of the EU AI Act marks a significant regulatory step in managing artificial intelligence technologies, particularly for general-purpose AI systems like large language models. By establishing a structured compliance framework that includes documentation, risk mitigation, and incident reporting, the Act aims to ensure accountability and transparency in AI deployment. As these rules come into full effect by August 2025, providers will face immediate penalties for non-compliance, underscoring the EU's commitment to a safe and ethical AI landscape. The upcoming EU AI Act's focus on high-risk systems marks a significant step toward ensuring accountability and safety in the deployment of AI technologies across critical sectors. By implementing rigorous risk assessments and fostering transparency, the legislation aims to mitigate potential harms associated with AI, particularly in sensitive areas like education and employment. The detailed guidelines set to be released in February 2026 will be crucial for industries to prepare and comply with the new regulatory landscape, shaping the future of AI governance in Europe. The EU AI Act's classification of most AI systems as minimal risk is significant as it encourages the development and implementation of voluntary codes of conduct, allowing for innovation while maintaining ethical considerations. This approach aims to balance fostering technological advancements with necessary oversight, setting a precedent for how regulatory frameworks can adapt to rapidly evolving sectors. The outcome of this strategy could influence global standards for AI governance. The release of the draft GPAI guidelines on July 18, 2025, is a significant step in the European Union's efforts to regulate artificial intelligence. By clarifying definitions, scope, and lifecycle obligations, the guidelines aim to create a more coherent framework for AI governance, which is crucial as technology continues to evolve rapidly. Finland's decentralized model for implementing these regulations may offer insights into how EU member states can balance innovation with oversight, potentially influencing future regulatory approaches across the continent. The EU's AI Act introduces a clear timeline for compliance regarding general-purpose AI models, allowing providers of pre-August 2025 models until August 2, 2027 to meet regulatory standards. This extended deadline aims to ensure that existing models are adapted to new safety and ethical guidelines, underscoring the EU's commitment to responsible AI deployment. The move is significant as it reflects a growing global trend towards stricter AI regulation, impacting how tech companies approach development and governance of AI technologies. The recent acquisitions in the influencer and affiliate marketing sectors, notably PMG's purchase of Digital Voices and Mavly, signal a growing trend towards consolidation among agencies as they seek to enhance their service offerings. With established players like Publicis and Omnicom poised to make strategic acquisitions, the landscape for digital marketing is likely to evolve rapidly, potentially increasing competition and innovation. This shift underscores the importance of adaptability in the marketing industry as agencies align themselves with emerging consumer behaviors and technological advancements. The integration of AI within private equity strategies underscores a significant shift in how firms identify and enhance value in acquisitions. By focusing on mature companies capable of benefiting from AI-driven efficiencies, PE firms are not only optimizing operational performance, but also positioning themselves for lucrative exits. The 49% year-over-year surge in PE AI deal volume in 2025 illustrates the growing confidence in AI as a catalyst for sustainable profitability and increased valuations. The integration of AI technologies in traditional industries such as manufacturing, logistics, and energy is significantly enhancing operational efficiency and profitability. By automating processes and optimizing resource allocation, companies are not only achieving higher EBITDA through improved throughput and reduced waste, but are also building resilience in their supply chains. This shift underscores the importance of leveraging data-driven strategies to navigate market volatility, although challenges like data quality and sector-specific implementation still pose barriers to widespread adoption. The surge in data licensing agreements among major tech players underscores the escalating importance of proprietary data in AI development, as evidenced by Shutterstock's lucrative deals and rising revenues. These partnerships highlight strategic efforts to secure data ownership and usage rights, reflecting a broader industry shift towards valuing data as a critical asset in the AI landscape. As legal scrutiny on data provenance and ethical considerations intensifies, these contractual strategies may serve to mitigate risks and foster innovation in AI applications. Thanks for tuning in to today's Tech and Finance Press Review. If you enjoyed our insights, don't forget to like, subscribe, and follow us for more updates tomorrow. Your support means the world to us.